Let's bring in Dan Suzuki, Deputy Chief Investment Officer over at Bernstein. Dan, it's good to have you. I know you're sort of on the lookout for signs of froth. You're watching crypto, some of these innovation names, not to mention the heavy reliance on the mega caps right now.
That's right. I think there's so much to unpack from what Sarah was going through. I mean, first of all, that big disconnect between the S&P 500 and the Fed policy story. I think that can be explained very much by two things. I think it's been driven by superior profit growth from the mega cap tech names, and that's been combined with rampant speculation that's been really causing a disconnect between relatively tight Fed policy and easing financial conditions. If you pull up any measure of financial conditions over the last few months, they've been skyrocketing. So it's no coincidence that as financial conditions have been easing, you've had Bitcoin rallying, innovation names rallying, microcaps rallying. I mean, pick your index to measure speculation. It's all telling you the same things, and all those things that have been shooting up, the riskier names that Sarah Eisen was referring to. All that's tied to the same story of liquidity. My issue or the risk here is that a lot of these measures of liquidity and speculation have really moved very far, very fast. So the question is, what's the source of that next leg of liquidity from here? I think it's hard to tell.
Well, there are people talk about dry powder, cash on the sidelines, money in money markets, and then they fold into that. Margin stability, certainly better liquidity on the corporate front, the possibility that earnings are going to catch up to sentiment. Is that not true in your view?
Yeah, I think, with respect to earnings, I think that is likely to continue. Everything that we look at in our data suggests that earnings acceleration will continue from here, but it's going to look a little bit different, Carl. I think, right now, if you look at the earnings forecast for the mega caps, they're actually set to decelerate over the course of the next few quarters. And so the big push you've had into these mega cap names has been driving some of the speculation. I think that gets called into question. The good thing, though, is there is something there to take its place, and that's the earnings for the other 490 some stocks in the S&P 500, which are set to continue to accelerate. So that's where I think the big opportunity is. But as things shift and move around, that transition could come with a little bit of volatility, particularly given how far this sentiment and speculation have run.
Dan, it's Sarah. When you wonder what is going to stop the rally in its tracks, or some of this speculative, feverish-like behavior that we're seeing, it feels like the market's kind of in a win-win right now, where good economic data is celebrated and certainly better than expected, but then weaker economic data is celebrated too, like we saw with ISM services for February on Friday, where new orders were down, prices paid were less than expected, and hey, that's good news because it means the Fed can ease rates.
Exactly, Sarah. I think, you have to take a little bit of pause when good news is good and bad news is good. It really speaks to the level of liquidity out there and the amount of speculation. I mean, in no fundamental textbook are you going to get a world where everything is always good news. And so I think, really the question is there something that's going to be causing that speculation to take pause or liquidity to come down? I don't necessarily see anything for the broad market. I'm not that worried right now because I do think that earnings are going to accelerate. But if you're just holed up in sort of a handful of stocks that are sitting on huge gains, that's the time where you want to think about maybe repositioning here.